Hi everyone, my name is Debra Rudd, and today I'm going to be talking about the taxation of 401k distributions after expatriation. Now, as usual, the people I'm talking about are expatriates, and there's a specific meaning of that term for tax purposes. This is either U.S. citizens who give up their citizenship, or U.S. green card holders, also known as lawful permanent residents, who give up their green cards after having the green card during 8 of the last 15 years. And a lot of times when we're talking about expatriation, we're talking about exit tax. So it's worth noting here that only covered expatriates pay exit tax. You're a covered expatriate if you fail any one of these 3 tests. You're covered if your net worth is over $2 million. You're covered if you had a high enough 5-year average tax liability. For people expatriating in 2025, that's $206,000. Or you're covered if you didn't file tax returns or pay taxes for the 5 years before your expatriation year. If you don't fail any one of those 3 tests, then you're a non-covered expatriate. And in general, the way you're taxed in the US after expatriation is like a non-resident alien would be taxed, because you become a non-resident alien when you terminate your US citizenship or your green card. But for covered expatriates, there are some special rules that apply. Today, I want to be talking specifically about 401k distributions after expatriation. And for covered expatriates, the 401k should be eligible deferred compensation. This is because it's deferred compensation under Section 877 Cap A, Section D, and it's eligible deferred compensation if you filed Form W8CE, which provides for a mandatory 30% withholding on distributions. If you didn't file the W8CE, then it's not eligible deferred compensation, and you're taxed on the entire account value as if it was distributed at expatriation. And that's not really what we're talking about today. I'm assuming if you were a covered expatriate that you filed the W8CE and we're dealing with eligible deferred compensation. If you're a non-covered expatriate, then we're just talking about a distribution out of the 401k to a non-resident. Now, for any income coming to a non-resident, the first question that you have to look at is it U.S. or non-U.S. source income? And so the general rule is that when you're looking at a 401k, the earnings in the account are going to be U.S. source because it's a U.S. account. The amounts attributable to contributions for services rendered in the U.S. is considered U.S. source income, and the amounts attributable to contributions for services rendered outside the U.S. is non-U.S. source. So if you're a non-resident because you expatriated and you have a 401k, the first thing you want to do is look at if you can assign some of this distribution to non-U.S. source income. Non-residents are taxed on U.S. source income. So you report the U.S. source income on your tax return. Non-U.S. source income not taxable to non-residents doesn't get reported on your return. So for the rest of this little mini presentation, I'm going to be talking about the U.S. source income part of this. One important thing to consider is tax treaties. Non-residents who live in treaty countries usually get 401k distributions without withholding by using Form W8BEN to claim the treaty benefit. Most treaties say that retirement account distributions are taxed in the country of residence. So you provide the W8BEN, claim the treaty benefit, and typically you'll get distributions without any tax withholding, and then you don't even have to file a U.S. tax return to report that. There is an exception for covered expatriates. If you had a 401k and you filed the W-8CE and it's eligible deferred compensation, then withholding applies even if you're in a treaty country. You can still claim treaty benefits when computing your tax and filing for a refund, but you can't avoid the withholding. And then non-residents who are not in a treaty country have withholding on 401k distributions just because you can't take advantage of the treaty benefit. So the way withholding works, if a treaty applies and you were not a covered expatriate, then you can use the treaty to avoid withholding and U.S. tax by providing the W-8BEN. If a treaty applies and you were a covered expatriate and it's eligible deferred compensation, then you have withholding at 30%. And if no treaty applies, then you have withholding at 30%. So what we're really looking at here today is these two second categories. A treaty applies and you were a covered expatriate, or no treaty applies, because you have tax withholding, you have, I assume, U.S. source income, and you're going to need to file a tax return. So now that you know you have to file a U.S. tax return, where does the income go? There's two potential places. You can put it on Form 1040, page 1, where it's taxed at graduated rates, or you can put it on Schedule NEC, where it's taxed at a flat rate of 30%. And to answer the question of where it gets reported, you have to answer the question of, is it FDAP income or ECI? FDAP income is described under Section 871A1, and this gets taxed on Schedule NEC, not effectively connected, at a flat rate of 30%. This is fixed, determinable, annual, or periodical income, and it includes all income except except gains from the sale of real or personal property and income excluded from gross income. I find the term fixed, determinable, annual, or periodical to be not particularly helpful in understanding what it is. So the way I think about it is, if it's not ECI, it's probably FDAP. So the other thing we have to look at is it ECI? That's effectively connected income. That's described under Section 871B, and it's taxed on Form 1040 at graduated rates. Effectively connected income is basically just effectively connected with the conduct of a trade or business in the U.S. And I don't want to go too far into the definitions and descriptions of these types of income. If you're preparing non-resident returns, then most likely you're already kind of familiar with these two distinctions. If you're not, you should be. So there's a couple different ways to approach reporting U.S. source retirement income. Through multiple private letter rulings, the IRS has said that they want the amount allocable to account earnings to be FDAP income on Schedule NEC, and they want the amount allocable to contributions to be effectively connected income reported on Form 1040. Now, one thing that I just want to note, kind of a interesting little fact, earnings in the account that are deposit interest seem to still be taxed, even though that's not otherwise taxable to non-residents under Section 871I. So we have what the private letter rulings tell us to do, splitting it between FDAP for earnings and ECI for contributions, but then we have the Form 1040 in our instructions and Publication 519, and those both say that it's ECI and it should all be reported on Form 1040, page 1. So what do you do? If you don't have very precise records, then reporting it as all ECI, as described in the Form 1040 and our instructions, might be the only feasible option. Maybe you have a way of doing some kind of estimates and allocating it to FDAP and ECI. But I'm not sure why you would do that when you have, permission from the Form 1040 NR instructions and Publication 519 to report it as ECI. Obviously, if you do have very complete records, you can do this split. But it's important to note that in either scenario, over withholding is likely to occur because withholding is 30%, and the amount that's taxed as ECI is going to be subject to graduated tax rates. So, if you want to take a bottom line takeaway away from this little mini presentation, I would say you should plan to always file a U.S. return if you're taking 401k distributions after expatriation and cannot prevent withholding using a treaty, either because a treaty doesn't apply or you're a covered expatriate. The withholding at 30% will probably be more than you owe, since all or a portion of the income is taxed at graduated rates, so most likely you have a refund coming, so you should file the return. And that is it for today. Just a short little topic. My contact information is here. Feel free to reach out to me if you want to discuss expatriation topics. And important to note, this presentation is not legal or tax advice. Don't use it to avoid penalties. Hire someone to help you if you need help. Thanks, everyone. See you next month.